Hi, and welcome to The Purposeful Banker, the leading commercial banking podcast brought to you by Q2, where we discuss the big topics on the minds of today's best bankers. I'm Alex Habet. So today I have a long overdue catch-up conversation with Dallas Wells. I really enjoy these conversations a lot. Typically we start around some sort of narrow framework, right? And it kind of expands into all kinds of interesting arenas and directions. We hit on things like transformation, latest frontiers, and of course, AI, not too much, but a little bit of it. But I'm also excited to share that Dallas will be making more appearances on the show going forward. As many will recall, longtime listeners will know that Dallas was a host back in the day of The Purposeful Banker. He's been busy running the product organization here at Q2 for the last couple of years, so we tried to leave him alone as much as possible to give him space to do that work. But lucky for us, a couple years later, he's making a little bit more time for us here at the Purposeful Banker again. So stay tuned for more. But for now, hope you sit back, relax, and enjoy my conversation with Dallas Wells. In the last year, right, we've kind of on this show rehashed a lot of what's happened, in the industry. But we haven't actually spent nearly as much time outside of the AI stuff, which has captured a lot of attention. Yeah. We haven't really spent too much time focusing on the non-AI developments, specifically in the technology space and things like that. So I'd be interested in your perspective. Where have you spent probably in the last year the most time, focused on or trying to solve? Outside of the AI problem, which we probably need to spend a dedicated section on that.
Yeah.
Right? So
we'll come back to that, but kind of outside of that, and sometimes it's a little hard to untangle those, but I think I get what you're after. So, one is, I would say maybe thematically, it is that in many cases the technology is finally catching up to the vision that's been cast out there for a while, right? So I'd say two big examples of that. One is the concept of personalization, or sort of being able to shape a digital experience for either an actual individual or for at least a cohort that shares enough traits to behave pretty similarly. Everyone has fundamentally agreed that that's a good thing, and that there's a positive ROI in that. So the users of the technology get great benefit from it, and you get better, as a provider of those things, as a financial institution or a streaming application, like whatever it is, right? There's real commercial outcomes for the providers of those things as well. Nobody's argued that. It's that that's really hard to do at scale. And so I think we're finally getting to the place where the infrastructure and the use of the data is in a place where you can make that real in production at scale, across millions of users. And I think like the Amazons and the Netflixes of the world have they made it no longer an optional thing, right? It just that's become the expectation. Is that a lot about me? Why can't you just skip through some of the stuff that I shouldn't have to do, or that I already told you before, or whatever the case may be? So that's one big bucket is kind of personalization. The other one, maybe a little more specific to the financial and banking universe, is that commercial is finally moving from analog to digital, and it's a slow, painful process because of all the complexity, right? And because of all the kind of custom stuff that's out there. But large, complicated businesses are finally moving much more of their daily interactions with their financial institution to a truly digital self-service channel. And that those are more connected and have almost a little bit more of a consumer feel to them, in a way that starts to drive some real efficiency. But I'll give you an example. if you're a large commercial customer and you want to change financial institutions, right? So even if that bank or credit union that you're moving to has an online application and they're like, hey, open your account, transfer all your stuff over. That's actually been like this really complicated kind of Rube Goldberg machine forever, right? Where we'll take the information, which is basically like, fill out this PDF, and then the reality behind the scenes is that Susie in operations is going to print out that form and then basically walk across the factory floor, kind of plugging all the wires for all the services you're going to need, and it may take 6 months and a whole bunch of trial and error to get all that stuff actually functionally moved. Mm-hmm. And so everybody looked at that process and like, man, the heck with that. Like that, I don't have room for that. There's not enough upside for me to go through that pain. And we are in bits and pieces now, actually moving beyond that, where we can actually move that whole process to the digital world, including a lot of the kind of supporting back office stuff that the financial institutions have to do. What's been really interesting about it is what that has required is now that the technology kind of exists, as banks are trying to roll this out, they're like, well, hey, we've always had Susie in operations put this information in that system over there as step 7 of the process. And the way you have this set up, now it's going into a different system, and then an API is moving it down the tracks. We'd still really like for it to be put in that system at step number 7. So everybody kind of wants to basically put a digital wrapper on their existing analog, I'll call it kind of process debt. It's like the human being version of tech mm-hmm. debt. And so that I think is the next hurdle to clear. And some institutions have gotten really good at it. They're like, hey, we're actually doing a real, to use the buzzword for it, we're doing a real digital transformation here. We're lighting all the processes on fire and burning them to the ground. We're going to start over and build a process around the new digital tools that exist instead of vice versa. But that's still not the majority. The majority of FIs are still like, nope, we've always done it this way. We want the digital tools. We want some efficiency out of it, but it has to match our workflows. So that's the kind of friction point, and it's kind of you feel it in the delivery of these projects. So you see a demo that's amazing because the technology is caught up, and then the implementation of it gets painful as we run kind of head on into those things. And then one more that I don't have a lot of maybe special wisdom to share, other than just like we've spent a lot of time on it, as has everyone, just fraud. Holy cow, that surface area has gotten wide and deep. And so again, as the technology moves faster, as there's more payment rails, as real-time payments and kind of more of these, P2P networks pop up, everybody gets really excited to add those, because their customers are asking for it. And it's just another fraud channel every time we open up one of those. And so there's this kind of constant trade-off between fighting the fraud versus adding too much friction or restrictiveness to the process. That's the line everybody's, every single day is kind of wrestling with, is as more and more of our customers, including some business customers at this point, have exposure to fintechs they're like, look, we got VC money to burn on the fraud side of it. Like we're removing all the friction. That's one set of now expectations that you have to measure against, versus the reality of a regulated financial entity having to say like, but we still have to protect the dollars and cents on your behalf and on ours. So that's tricky. But that's probably 3 big areas that over the last year, me and the teams here have spent a whole bunch of time on.
So on the fraud thing, what is a typical acceptable level of fraud before friction is required? Like what would be a ballpark?
Yeah. So here's the like basically what's the proper appetite for that, and it's sort of like, again, you and I both came up in banks early in our career, and it's like all loan losses are bad and all fraud is bad, and you have like a bad taste in your mouth about both of those things. But if you just kind of try to back up from that a little bit and just look at the P&L, right? Just look at what driving the revenues and the expenses through the financial statements. If you have zero loan losses or you have zero fraud losses, you're doing it wrong, and you are leaving substantial revenues on the table. So there's not an across the board answer for that other than it's not zero, and that for some. I mean, we talk to a lot of executives who are like, we're just getting killed by this fraud. Okay, well, how much fraud have you had over the last 6 months? It's like $8,000. Okay, you're not getting killed by it. Like, we spent more on this phone call, right, to talk about it than just like eat it and move on. There's others that are like, they have to whisper the number because they're like, you wouldn't believe the amount of Zelle fraud that we have, right? That just like, how long before we just like close that down entirely because it's not worth it to us. So it's a moving target. It has more emotion maybe than it should instead of analytics. But I think that's where the institutions that we see handling it best have just sort of just like they manage their loan loss reserve and their kind of tolerance for like, there's a certain number of basis points that's going to be about right, and we will fiddle with that number constantly and feel it out based on the cycle and what our current strategy is and all those things. But there's kind of a range that we feel like is our happy place, and we want to manage to that range, rather than just we want it to be zero and anything above that causes some discomfort, and we basically just go until the discomfort gets to where there's heads rolling about it from the board level down or whatever it may be, right? It's basically like you have to decide up front, this is going to be where we want to manage it to, and then be willing to adjust as the dynamics around you change as well. But it's just part of the business. It is a cost of doing this business.
And when there's a new payment rail, for example, because that's happening here, I suspect the fraud tools are not quite mature in new rails as they are in older rails, right?
Yeah, that's right. And it's there's two aspects to that. One is that the trajectory is faster, right? So, and again, real-time payments, that it's kind of in the name, right? Is that we want this transaction to happen essentially instantaneously. So you see the benefit, you see the upside, you also see that like, holy cow, when that money's gone, it's gone, right? That's why we have all the controls around like a wire transfer that we do, because we know from the scar tissue over the last several decades at this point, once a wire goes out the door and actually gets processed, like if it's a fraudster on the other end of it, you will never get it back, right? That they're really good at that part of it. Lands at the destination and it scatters to the winds. And so RTP will be another version of that, with the difference being that we have not yet had the decades of scar tissue to kind of build up what those controls should look like. So we can take some of the things that we know will be the kinds of controls that we need, and we can put those in place from the outset. But we also know that like, as we start to get to some real critical mass with a new payment rail, that somebody's going to come up with a whole new creative way to steal money from us that we haven't seen before. And so the pattern to this point has been that for each one of those new call them payment rails or channels, that we kind of come up with a very specific set of solutions to manage that particular channel, right? So if it's a if you're using the Visa and MasterCard card networks, right? There's a way to dispute those transactions. There's regulations around it, and there's software solutions you can buy to manage that. We sell one of those, right? Centrix DTS does a great job of that. There's positive pay for checks and for ACHs, and there's new solutions that we've seen pop up around some of the P2P. Some of them are like, we fight Zelle fraud. That's it. That's all we do. Well, as a financial institution, it's like, do we really want to manage fraud that way? Of every time there's a new place for people to exchange money, like, all right, I can send somebody a text message in iMessage now, and I can start to exchange money that way. Does that need its own, freestanding solution, and therefore another line item in my bill and another person to manage it and all those things? So I think the place that we're heading to is to try to think of those less as freestanding solutions to manage each channel, and instead the channels are going to, if anything, the pace will pick up, and so we just need signals around each one of those, and we need a central place to kind of think about managing fraud that happens in our customers' accounts, and a place to work cases and adjudicate those things as they come in, and instead we just pump in the new signals, right? So RTP will have a new set of signals that we haven't thought we needed yet. Some vendor out there will all of a sudden supply it, and it's like, here's your API surface to send us that thing, so that we can now see that signal and we can make those decisions in the framework we already have, instead of having to spin up a whole new one, where now somebody's managing fraud and they're having to swivel their chair across 15 different applications. That's got to come through one window. So I think that's an interesting thing of like, we'll see who the winners are in that, as that comes to reality. I think Q2 is making a bet on a horse or two there kind of as we speak, but it'll be, I think it'll be interesting to see how that shapes up. There's so many dollars at stake that like, it will come to a better place. But it's been kind of a Wild West in terms of fraud for the last 5 years, certainly.
And it's an interesting behind the scenes look. I certainly appreciate that.
Yeah.
On the personalization, the first part you talked about personalized, I guess, guidance or insights that you get. We've heard that would be, you often hear in the fintech ecosphere, right? It's all about personalized experience and things like that, and that there's nothing new with that. But walk me through how you all decide what you're going to personalize next. How do you pick the angles of personalization? At the scale of, I guess, Q2's product set, to provide to customers. Yeah.
So we say personalization, and even that, even for your Netflix, things we think you'll enjoy list, right?
Yeah.
It says it's for Alex Habet. It's for people like Alex Habet, right? So that's the first thing, is to start to figure out what are the real cohorts. And so what we've spent a fair amount of dollars and time on over the last couple of years is really getting much better telemetry on what's the actual behavior of users inside of these systems. So, in the olden days, it was good enough to know like how many times did they log in and kind of how long were they in there, right? And like that was good enough. Well, now again, we're able to do in a much more sophisticated way. When and where and how did they log in, and then what was the actual flow through all the steps that they're trying to do. So that's what we're actually trying to capture is what's the different sets of behavior in there. So that's kind of step one. Is
it down to the mouse movement?
It's gotten down to like, where are the eyeballs, right? Like, where's the kind of heat map on the screen of kind of what gets noticed, right? So, you mentioned personalization. Everybody's been kind of bragging about that for a while. What they really meant was like, hey, we know who to spam with email, and we know kind of what banner ads, to show them based on their behavior to this point. Now it's moving towards like where we're headed with it is the entire layout of the screen will be different. So we need to know for this type of customer, what should be in the top right of the screen, or what should be, at the top of the kind of above the fold, so to speak, on the mobile app, so that they don't have to scroll to it. That it's like the most valuable real estate. What needs to be in that spot for these different cohorts? So it is understanding that behavior, and again, that's movement through there. It's where the focus areas are. It's how transfers between accounts are made, how payments are made. It's all those behavior characteristics. The second part of that, the one that is a little more complicated because it's so different for each institution. We can't just do these like broad across our tens of millions of users research on this, is what's actually the ideal outcome that you're after, right? Like, hey, we kind of see what the behavior patterns are, but how do we nudge that towards the kind of behavior that either reduces some risk or reduces some fraud or moves that user towards completing something that we want them to do? Sometimes it's things that, they started setting up a new account and got derailed somewhere. How do we get them back on track? Or they started a loan application and abandoned it, or we turned them down, but there's other options for them, right? So we want to lead them to the right outcomes, and we want to lead them to profitable outcomes for the institution. So we have to understand like what those are. What's the actual outcome that you want? It's more complicated than it seems like it would be, right? Like, do you want people to make do you want people to write a check for their electric bill, or to pay it through the bill pay app, or to do, to put it on their debit card? Those are very different costs and revenue profiles for you for the exact same transaction to happen. And so maybe the user's kind of indifferent as long as the bill gets paid, who cares? But you as a financial institution might care deeply about which one of those lands how. So again, back in the early days, it was like, how do we get people to do either more signature-based transactions with their debit card or more PIN-based ones, depending on, size of the transaction and where they're shopping and all that stuff. This stuff gets wildly complicated when you do it across, again, a customer base and all the products that you're dealing with. So that's where I think you can get lost a little bit in the noise. And so you have to kind of start with which things really move the needle. And kind of settle on, not like, well, we've got 200,000 customers. We need 200,000 different experiences, how to precisely optimize for each person. Like, no, here's about the kind of 4 or 5 different cohorts that have very different behaviors or different approaches. And then here's the golden path for each one of those. And now we can kind of optimize, times 4 or 5. Here's the nudges that we're making. We can measure if it works or not. You kind of keep it to a manageable scale. As you get used to it, and just getting used to working this way. And what I mean by that is like, if you've got all of a sudden within your institution, multiple different experiences that you're managing, and you want to we'd like to test, can we get more people to use their debit cards if we change this arrangement, or we send them this email, or we show them this, tutorial, right? There's lots of tools at your disposal. And you kind of need to do a little trial and error. So first of all, you have to turn on that functionality. How do we test that internally? How do we go from a test environment to a production environment? Those are things that are rapidly changing, right? It's actually pretty easy to test in a forward environment and then just promote that to a production environment. But everybody's like, wait, we didn't get to do all the, kind of manual hands-on testing. And we didn't take it down overnight and rewire everything and test it again for a minute and then turn it back on. It's like kind of live on the fly. We did it at 2:38 p.m. in the afternoon, right during, normal traffic times. That stuff it's back to that kind of process debt thing. It takes some adjustment to get used to managing that. So as we're starting to roll this stuff out, there's lots of new technology, there's lots of new processes, and there's always a lot of enthusiasm around this of all the possibilities. And it's like, yes, we're excited too, but let's start with a handful of use cases that we can get our arms around. We can tiptoe into this approach, trip over the things that we're inevitably going to trip over in a small way instead of in a massive way. That's the rough steps, is understanding which way you want them to go, and then figuring out which nudges work. It's a simple thing to whiteboard out, but man, in practice, that's it, right? That's working with your customers now in a digital age. It used to be you would train your tellers to, greet people a certain way and get faster at processing certain kinds of transactions. It's the same concept. It just now happens, in your digital channels instead, or in addition to, in reality. And so we've got to constantly be kind of iterating and smoothing rough edges on that.
When I asked you the question, I in my mind, I was picturing banner ads and, exactly the email, because that is my current experience across.
That's how most places do it. Yeah.
What you described sounds like magic, kind of. I mean, it really sounds incredible. So, I mean, how far away are we from truly, being blown away when you log into your online banking and it's like, this thing knows me?
Yeah. I think we're right there, so we have our, personalization framework, in production. There's more than 1 million, real end users, maybe 2 million at this point, using it out in the wild. And the progression we have to go through is we start with the, consumer accounts, somebody who has maybe a checking account and a CD and one loan, right? It's a fairly manageable, relationship. And then we have to step into this person has personal accounts and they have access to their kids' accounts and they're running a small business and that business has 17 accounts with, different ownership and different users. It kind of spider webs in complexity there. So for the simpler kind of accounts, like we're there, right? It exists today. We can kind of get our arms around that cohort and what it looks like, and we can give them an experience that feels very, very personalized. And then we just have to kind of work our way up that complexity ladder. So what we're kind of working on rolling out next is that baby step into the small business owner, right? Who has some personal and some business stuff. We got to figure out how to mix and match those in that experience. And then you've got people who, as we start to measure, like, well, which cohort are they in? What's their behavior look like? Well, it kind of depends. Did they log in to check their personal checking account and see if they have enough to book the vacation? Or are they processing payroll for their business on Friday? That's like, the job to be done there can change. And so what we have to figure out is, how do we identify which job they're after, right? And which experience to serve them. So those are the interesting challenges that we're walking through that we can see a path to them, but then you got to you go from sketching it out to doing it at scale. So we'll have some of those this year, doing some of that small business stuff, which is pretty exciting.
I also wonder, though, as scale continues to evolve, does the compute needs to doing this, widely, does that really become a bottleneck? I mean, I would imagine going through transactions and behaviors, for millions and millions of customers, and that can evolve, and businesses can be included in that. There's got to be a lot of computing power to analyze this stuff, right?
Yeah, it is. And you not to get too much into the weeds with it, but if you think about what's actually happening, right? You've got a user viewing something on a screen. You've got all the digital banking provider technology running its massive processes. And what we're actually doing is we're calling back to other systems inside the institution to be like, what is the current balance? What were the last 5 transactions? When's that next loan payment due? And then we're maybe calling out to a separate card processor, to see what's the status of when you swiped at the gas station 10 minutes ago, right? So there's all these calls going out. So that's what the rollout looks like at this point. Is you build it all, the code all works, it works great, it's performative, it's stable, and then you put it into production for an institution and they test it, and what you'll find is like, all right, most of it's working as expected, but for this core provider, when they get to 12 accounts instead of 10, there's too much latency, right? Like that compute or the calls are taking too much time. So then we have to go back and kind of rebuild how we're doing some of those calls and that kind of stuff. So those are the things that that we're working through. And basically that universe starts kind of big of like, oh my gosh, there's all these kind of performance things, and we just shrink them down. We kind of Pareto them out and deal with the biggest culprits first. So with our early adopters, we're down to the corner cases. But that's a challenge that that's kind of fundamental to our business. So the framework's a little different in that we have kind of an additional layer to go through of what audience is this particular user who's logging in? What audience are they in? And then kind of what experience has the financial institution configured for that particular audience? So there's one extra call in there. Now it's a complicated one, but it's like one of, many dozens or hundreds that we're making at any given time. So it does add a little layer of complexity, but most of that complexity already existed and is something we've been dealing with for 20 years, and not just Q2. The whole industry has been dealing with that for 20 years. So now I'm not smart enough to figure out how they solved that, but we've got teams that are that have been doing that for a long time and are pretty darn good at it.
Absolutely. Hey, what do you think of all these co-pilots out there?
I think it's a it's a step change on the order of mobile or cloud. I really believe that we've had the benefit of seeing, from the Precision Lender days. Like we rolled out a co-pilot in 2017, right? So we've been able to see the power of that. Now, not the generative AI version, but more the deterministic kind of rules-based version of a co-pilot of if you see the user doing this, guide them to do this thing, or here's the information they're going to need, right? And to kind of walk alongside a user, kind of smoothing out the process for them, or helping them connect disparate systems and parts of the workflow. Grab this information from Salesforce and drop it in here, do what you need to do with it, and then here's the thing that's going to need to be passed along to the loan origination system. And the co-pilot can what was really useful about it is it kind of puts a boundary or a handle around this set of functionality, right? It helps a human kind of understand, oh, I need the co-pilot to go grab this thing from me and do that. Or while I'm doing this over here, maybe the co-pilot can sort through this data, right? And pull out these things for me across a database of 2 million things, right? That a human can't do, but the co-pilot can go grab it. So I think the technology feels a little bit like magic sometimes, but to me, the framework of just sort of it's like a third party entering the process now. You have the human, you have the kind of core software application that they're actually working in, and now you have this third thing, this third entity dropped in there that's like, hey, I can see what you're doing, and I can see what the application's doing, and I can kind of help you to coordinate and do the job that you're trying to do. And so it's super powerful. And then when you add the generative AI component to it, it just sort of explodes the possibility out there. So I'll tell, one thing that's been sort of interesting since we started it so early. We use some kind of off the shelf language processing tools for the chat interface that our co-pilot had, and they were really clunky, right? They didn't speak bankerese, right? They didn't understand some of the terminology that a banker would be using. So we had to basically scrap that and kind of build our own. And so in a very narrow set of potential things to do, that co-pilot could be really, really good, right? Like we could kind of program it to speak the sorts of things that it needed to be able to do. But if you got outside of the kind of typical rails, it would just be like, look, nobody's ever taught me that word. I don't know what that means. And so now when you can drop in generative AI, where it's like, hey, I can kind of infer what I think you mean, right? And it opens up the possibilities in a really amazing way. So we're making a big bet on it. We think we've seen real evidence, right, that it moves the needle. It absolutely can alter behavior for the humans at scale. where you can have one person make a decision. Now the Copilot tells all thousands of users that are using that thing, how to make that slight nuanced adjustment or how to use that data point in a certain way. It absolutely matters. And so the process we're walking through now is we have the framework, we have the platform, this Copilot platform that's very mature at this point. It's been used to price at this point trillions of dollars worth of loans and deposits and evaluate profitability, and now it's doing fraud management stuff inside of other solutions.
Hallucination free, I might add.
Yes, hallucination free. Again, that's the deterministic approach. We know what the outcome's going to be because we've kind of hard coded it that way.
Yeah.
And so the question is, for many of the jobs and for many of the use cases, deterministic is the right answer. There are some jobs where that probabilistic kind of more open-ended generative AI thing is the answer. And it's not just the chat interfaces, like that is an aspect of it, but it's actually more of the automation, right? Like read everything that's on this form that you just uploaded and see if you can figure out what the free cash flow looks like and then load that over here. And so like the deterministic thing couldn't without a doubt, identify those, but generative AI can be like, hey, I'm 99% sure that like this is what you need and where you need it. So we got to figure out what those use cases are of kind of which tool to use in which case. What we see from a lot of vendors is it's like, man, ChatGPT is the greatest thing since sliced bread, so we're using it for all the jobs. And I think that just like that's not a realistic approach to use, in the banking industry. Instead, it's got to be like, no, there's a lot of times where we have to know, the model underneath has to be auditable and predictable, and we have to know exactly what's going to come out. And we can't kind of go outside of the bounds of what's safety or frankly legal, right? And so and then there's other places where it's like, no, that either is an appropriate place where there's a human still in the loop that can kind of, get help from the generative AI model output and just use it as another signal. Well, the model thinks this, that makes sense, and then I confirm and go ahead. So kind of mixing and matching those tools in a thoughtful way and making sure that our platform can kind of use both side by side, depending on where it's appropriate, and clearly identify which is which and document it and all the things that you're going to have to do to keep your examiners happy. So we think it's really exciting. And the nature of the technology is that you can see some of the cool, demos and things that are out there, and then pretty quickly roll them out in a real way, right? It's like there's a new version of GPT available. We kind of test it, we connect it to whatever data model we're comfortable with exposing it to, and then off you go. So I think it'll be a fast innovation cycle that will kind of blow people's hair back a little bit.
I didn't really contemplate the notion of different some generative models in certain workflows, and then purposefully excluding generative models in other contexts because of the risks that they bring, and having to be 100% correct, right? Kind of almost excludes them in certain cases. Yeah. But wouldn't that, in theory, become, that's like a whole new area to manage for banks at this point, right? They don't have this discipline today, as far as I know. They're good at managing models, but they're not good at managing this kind of model yet, right? So
yeah, that's right. And I think that's where it's made it like everyone's talking about it. They're paying attention to it. They want to know, like, hey, show us what you're doing with generative AI. And we show them these amazing demos. And we're like, here's this thing, and we're actually pretty confident in it. Do you want to buy it? Like, oh God, no, I just wanted to see what you were doing.
Yeah.
I'm not ready for that yet. So I think that's what'll be interesting is it's sort of like real-time payments, right? We talked about that a little earlier. The adoption of that has been pretty anemic to this point. And so it'll happen slowly and then all at once. And I think generative AI will be the same way. So some of it is a comfort level of which approach are you comfortable with, and is your board comfortable with, and can you kind of get your arms around the risk in the way that you responsibly should. And so, I think rather than just say, here's your generative AI, plug it in and use it for everything, the sort of Microsoft Copilot approach of like, hey, it's in there. Once you turn it on, like it's kind of loose in the enterprise. I think for banking, it's got to be much more of a use case by use case. So in our terminology, right, there's the Andy Copilot, and Andy has skills. And so we could like, our intention is that certain skills where it's appropriate will be ones that use generative AI. But you opt into those and you decide, yes, that's a skill that like the outcome is worth it, and I have well-documented risk controls around it. I will turn that one on and use it for just that thing. But everything else stays this deterministic kind of a little bit more of a closed system, better controlled approach to it. And my guess is that you'll pretty soon wake up and you'll start with one, and all of a sudden you've got 101 of those generative AI skills. But it's like making that conscious decision, use case by use case. This is the right tool. We understand it. We're comfortable with it. Let's go.
Yeah. At first when I experienced things like generative AI the first time personally, I thought that this would, it would take over everything within like 6 months.
Yeah.
How could it not? Right. It's but it's now been a year and a half ish. And there is adoption, on the consumer side, I think at some level of scale, right? But in the industry, it's still not there, right? And that's fine for all the reasons we talked about. Do you think, though, in 5 years?
I think it's everywhere. Yeah, in 5 years.
Do you think it's everywhere in 5 years? Okay.
Yeah. I think it is. It's too game changing to not be, and so I think that's why everybody lots of people want to understand where we are as a tech company, where we're headed with it. And it's not so that they can buy it next quarter. It's so that they are comfortable with the fact that, yeah, we've got partners that when we're ready in 2 years, 3 years, they'll be ready also. Yeah. And that's, I think, what the place everybody's trying to get to. So it's going to be a really interesting ride to see see how that adoption actually happens. But I think it's going to be everywhere. It's there's too much efficiency there to be had.
All right. Well, I have to remind future Alex to pull this footage in 5 years and have a conversation with you.
Yeah. Check back
money
how
right now.
Done we were, how much we nailed it. Yeah.
All right. Well, Dallas, thank you. Thank you again for coming back on the show. Long time, but it's been great to catch up. And from what I hear, maybe you'll be coming back a little bit more regularly.
I think that's the plan. Yeah.
Yeah. So
we've rearranged some duties, and part of it was to make some more time for this. So look forward to being back.
I think a lot of the old listeners of the show are going to be very pleased. We're kind of bringing back the old crew, like Jim Young.
We'll see how the data goes. Yeah. If you see me for 2 and then I'm gone, you'll know it didn't go well, and it was worth a try.
I'm sure there'll be a huge spike, and you're locked in on a contract. So
all right.
Well, thank you again, and we'll catch up soon.
Yeah. Thanks, Alex.
And that's it for this week's episode of The Purposeful Banker. If you want to catch more episodes of the show, please subscribe wherever you like to listen to podcasts, including Apple, Spotify, Stitcher, and iHeartRadio. And if you prefer a video version, you can find us on YouTube as well. As always, let us know what you think in the comments. You can also head over to q2.com to learn more about the company behind the content. Until next time, this is Alex Habet. You've been listening to The Purposeful Banker.